journal entry for bad debts or irrecoverable debts seems complicated to many students. This chapter is very important for accounting exam. So today I will take a question from Cambridge O-Level Accounting past paper. So here what is written, Anti started in business on 1st September 2022. All sales are on credit and payments is required from customers within 25 days. Okay. On 5th of May 2021, LW, a trade receivable, was declared bankrupt and a debt of $600 was written off as irrecoverable at that time. Okay, so here we see LW, a trade receivable, okay, our asset, current asset. So LW owed us $600, so now we will not get this amount. Okay, so this is a bad debt or irrecoverable debt. Okay, so for this type of transaction we need to make journal entry. Okay, as it is a loss or expense, this amount will go to the income statement. I'll also show you how to prepare extract from the income statement. Okay, so here irrecoverable debt, it is an expense. Expense is normal debit account, debit balance. When expense increases, expense will be here debited. When expense decreases, expense will be credited. Here it is an expense, this expense is here increasing, or you can say expense is normal debit balance, debit account. So here expense is irrecoverable debt, it will be here debited. Okay, and here we have current asset, which is LW, a trade receivable. So this current asset will be now decreased. Okay, when asset will be decreased, asset will be credited. Okay, so let us write here the date first, 2021. So 2021 May 5. Okay, so here first of all our debit account is irrecoverable debt. Okay, this account to be debited. So here on the debit column we will write the amount, which is $600. Okay, so here what I said, our trade receivable, which is a current asset. Okay, so this asset will be decreased, so trade receivable here will be credited. Okay, so let us write here LW. Okay, this is a trade receivable, so it will be here credited $600. Okay, so we have a requirement here to write the narrative. Okay, because it carries mark. Okay, so what we'll write, we will write $600 written off as irrecoverable or bad debt. Okay, now what about this item, this amount? Where will this amount go? This amount will appear as expense in the income statement at the end of the financial year. When business prepares financial statement, that time this amount will be appeared on the income statement. Okay, so here how to prepare extract from the income statement. Okay, so first say this is the format for the income statement. Okay, so here we will write the dollar. Okay, so here the expense section. Income statement there are two sections, right? One is income section, one is expense section. So here expenses section, we write here what all the expenses of the business. Okay, so this is also an expense, $600. So we will write this amount here. So before we write, let us have a look at the question once again. So here what is written, in addition to the irrecoverable debt of LW, other irrecoverable debts of $4,100 were written off during the year ended 31st August 2021. Okay, trade receivables at 31st August 2021 were $91,500, and Anti decided to create a provision for doubtful debts of 5% of trade receivable. Okay, so here prepare an extract from the expenses section of Anti's income statement for the year ended 31st August 2021. Okay, so here we have some other irrecoverable debts, which is $4,100. Okay, so here, what is the total irrecoverable debts? Let us write that one first. So we write here. Okay, so here we have two amounts here. First of all, we have here $600. So we will write here $600. Then on the question we have other irrecoverable debts from different trade receivables. Okay, so here we have $4,100. Okay, so $4,100 plus $600. So total irrecoverable debts are $4,700, right? Okay, so this is the expense we need to write in the income statement always. Okay, now what happened? Here it is written that trade receivables at 31st August 2021 was $91,500, and ANTI decided to create a provision for doubtful debts of 5% on trade receivable. Okay, who is ANTI? We are ANTI. Okay, so now we decided to create a provision for doubtful debts, okay, at the rate of 5% on the remaining, on the other trade receivables, not on this trade receivable LW, okay, other trade receivables, okay, which is $91,500, okay. So at the rate of 5%, you know, provision for doubtful debts, it is an expense as well, okay, it appears in the income statement, okay. So we need to write this expense here as well. So let us write here provision for doubtful debts. Okay, now it is 5% on other trade receivables. Okay, now we need to calculate, yeah. So here we have trade receivable $91,500, right? So the rate of provision for doubtful debt is here 5%, right? Okay, so here if we calculate, what we get? 4,575. Okay, yeah. So this is the provision for doubtful debts. This will appear here on the extract of income statement. Okay, so let us write here 4,575. Okay, this is how we need to prepare extract from the income statement. Okay, what about trade receivables? You know, it is a current asset. Yeah, current asset appears on the statement of financial position, right? So here we will now prepare extract from the statement of financial position, which is also called a balance sheet. Okay, so first of all, let us write here extract from statement of financial position. So we will prepare at 31st August 2021. Okay, so here let us draw a table. So here, okay, so where does trade receivables appear? Which section on the statement of financial position? You know, there are several sections: non-current asset, current liability, non-current liability, capital and equity sections. Okay, so here, you know, trade receivable is a current asset, so we will include this item on the current asset section. Okay, so first of all, let us write here current asset. Okay, so here we will write the trade receivable. So what is our trade receivable? It is $91,500, right? So let us write here trade receivable $91,500. Okay, so why we wrote this amount here? Because we have calculation. Okay, we will subtract the provision for doubtful debts, which is 5% on this amount. Okay, and total it was 4,575. This amount we need to subtract. Okay, so many students do not subtract provision for doubtful debts from the trade receivable when they prepare financial position. Okay, in this case financial position is not balanced. Okay, for this type of mistake, so let us subtract minus or less provision for doubtful debts. Okay, so here we will write 8575. Okay, so we will subtract this amount. So after subtraction we get here 86,925. Okay, this is the final amount of trade receivables. Okay, so this is how you need to prepare extract from statement of financial position.